Good morning. Today's national accounts confirm that the Australian economy continues to grow. Australia is in its 29th consecutive year of economic growth. And in today's national accounts, in the December quarter, the Australian economy grew by 0.5% and 2.2% through the year. This is a step up on the 1.8% through the year growth that we saw at the September quarter. And this puts to rest the claim by some that the Australian economy was softening at the end of last year. The Australian economy remains resilient and continues to defy all those who seek to talk it down. The bushfires have not had a significant effect on the national accounts in the December quarter. But we know that the fires have had a devastating impact on those communities. Most of the economic effect of the bushfires is expected to be felt in the March quarter. The impact of the coronavirus is serious and is ongoing and is affecting economies the world over. The coronavirus is impacting on the tourism, education and export sectors, but also disrupting end-to-end supply chains. The measures the government has already put in place are designed to keep Australians safe, and that remains our first priority. As the Prime Minister has foreshadowed, the government is working on a targeted, responsible and scalable series of measures that are designed to keep business in business and Australians in jobs. Our fiscal response is designed to keep businesses in business and Australians in jobs. Our responsible fiscal management has given the government the flexibility to respond to these economic shocks, with announcements already about the $2 billion National Bushfire Recovery Fund, the $1.3 billion in additional assistance in relation to the drought, and $4.2 billion in infrastructure spending brought forward. This comes on top of providing the most significant tax cuts in more than 2 decades, and our $100 billion 10-year infrastructure plan, as well as our record spending on health, education and disability support. Having a strong budget position has allowed us to provide this support without raising taxes. This is a critical point. We have been able to provide this additional support in the face of the external shocks that we have faced without increasing taxes or without cutting essential services. Just this week, the OECD singled out Australia and Germany as 2 countries that could respond to the coronavirus with additional fiscal measures without endangering debt sustainability. The Australian labour market continues to perform well, with more than 1.5 million jobs created since we came to government, and the participation rate sitting around record highs. Annual jobs growth is 1.9%, which is nearly double the OECD average and nearly 3 times what we inherited upon coming to government. The housing market continues to stabilise, with housing prices up 7.3% through the year to February, and the value of new housing finance commitments up 14% through the year to December 2019. The IMF continues to forecast that Australia will grow faster than the United States, the United Kingdom, France, Germany, Japan and Canada in 2020 and 2021. We have maintained our AAA credit rating, and we're one of only 10 developed economies to maintain that rating from the 3 leading credit rating agencies. In today's national account numbers, growth over the quarter was driven by household consumption, by public final demand and net exports, with inventories also contributing positively to growth. Household consumption increased by 0.4% in the December quarter. Expenditure increased in 13 out of the 17 categories, and importantly, in 5 out of the 7 discretionary categories, including furnishings and household equipment. Clothing and footwear also increased strongly. Growth in household consumption continues to be supported by solid growth in household disposable income, which increased by 2.6% over the second half of last year, the strongest six-monthly increase in 5.5 years. That is that the household disposable income in the second half of last year increased by 2.6%, which is the strongest six-monthly increase in 5.5 years. This follows the government's low and middle income tax offset, which is putting more money into people's pockets and has benefited over 8 million people. Continued growth in labour income, low interest rates and an increase in housing prices has also supported consumption. Government consumption increased by 0.7% in the December quarter and 5.3% through the year, supported by the continued rollout of the National Disability Insurance Scheme, an increase in the Pharmaceutical Benefit Scheme listings, as well as ongoing aged care initiatives such as home care packages. These initiatives are supporting Australians and ensuring that they have access to the essential services that they deserve. Government investment is 2.4% higher through the year and has been the case for a number of years. Government investment is an important driver of growth and this is expected to continue. Government investment will continue to be driven by strong growth in transport infrastructure investment, which is supported by our $100 billion 10-year pipeline. This will add to the critical infrastructure we need to generate jobs and support private investment. Net exports in today's national accounts contributed 0.1 percentage points to GDP growth in the December quarter. A lower Australian dollar and strong international demand for Australian exports is supporting growth. Exports are also being supported by the free trade agreements, which now cover around 70% of our two-way trading relationships compared to just 26% when we came to government. In the December quarter, the current account surplus was $1 billion and is the third consecutive current account surplus, the longest consecutive period of current account surpluses since the 1970s. While new business investment fell by 0.8% over the quarter, there are positive signs emerging in the mining sector, where mining investment increased by 5%. Investment intentions from the Capital Expenditure Survey indicate that mining investment will continue to grow strongly in 1920 as well as in 2021. Non-mining investment fell over the quarter, but is expected to be supported going forward by the elevated pipeline of non-residential building work. Dwelling investment fell by 3.4% in the December quarter. However, the established housing market has stabilised in recent months, with housing prices and turnover having picked up following significant declines in recent years. National auction clearance rates are back above their 10-year average, and in trend terms, the total value of new housing finance commitments has been rising since May of last year after declining for more than 2 years. Reflecting the pickup in housing prices and turnover in the established housing market, ownership transfer costs partly offset the fall in dwelling and non-dwelling investment, contributing 0.2 percentage points to growth. Turning to the income side, growth in the compensation of employees, which is effectively the wages bill across the economy, was up 1% in the December quarter to be 5.1% higher through the year. Through the year, growth has been above 4% for over 2 years, the strongest run of growth since 2012, and above the 10-year average of 4.6%. Average earnings grew by 0.5% in the quarter to be 3% higher through the year. The broader measure of average wage growth has been running at a faster rate than the narrower measure of wages growth, such as the Wages Price Index. Real wages, as measured by average earnings, are above their 20-year average in through-the-year terms. Company profits decreased by 1.7% in the quarter, reflecting the impact of the falling terms of trade on mining profits, but remaining 5.8% higher compared to a year ago. Company profits, excluding mining, grew by 3.3% through the year. The drought continues to have a devastating impact on regional communities and the farm sector, with farm GDP 2.2% lower through the year to the December quarter. over the past 2 years, farm incomes have fallen by over 30%. Living standards, as measured by the ABS's preferred measure of real net national disposable income per capita, are 1.2% higher through the year. Productivity growth increased modestly by 0.2% in the quarter to be 0.4% higher through the year in trend terms. I've spoken numerous times in recent months about the need for all levels of government and business to address Australia's productivity challenge. To this end, the Morrison government has legislated the biggest tax cuts in over 2 decades, committed to a $100 billion infrastructure pipeline and to the creation of more than 80,000 new apprenticeships, as well as a new wave of deregulation reform to boost investment and create jobs. As the Reserve Bank Governor has said, Australia's economic fundamentals remain very strong, and Australians can be confident about their economic future. But we are confronted by significant domestic and international economic challenges as a result of the bushfires and the coronavirus, which is still evolving. Australia is well placed to navigate these challenges with our economic plan, our responsible budget management, which is contributing to the resilience of the Australian economy, which is reflected and reinforced by today's national accounts. I'm just going to quickly refer to a few slides, and then happy to take questions, Shane. The first slide clearly points out that in the December quarter, we saw 0.5% growth, 2.2% through the year, which is an increase on the 1.8% that we saw in the through the year numbers to the September quarter. And it completely rebuts the argument put by some that the Australian economy was weakening in the back half of last year. To nominal GDP growth. Nominal GDP growth is 4.1% up through the year, but it actually fell in the December quarter. This reflects a fall in the terms of trade, where iron ore prices were around 10% lower, and that the basket of coal exports, in terms of prices, were down by around 15%. Next slide. This is again a positive story. 13 of the 17 different categories of consumption are in positive terms, and 5 of the 7 discretionary categories are also in positive terms, including recreation and restaurants. The next slide is new public final demand. New public final demand is obviously reflecting what is happening with government investment as well as government consumption. At 4.7% through the year, it's well above the 10-year average, and it's a reflection of what the government is doing to strengthen the Australian economy. The next slide is farm GDP. This is an interesting slide because, as we've seen, the drought has had a major impact, being 2.2% through the year. But we saw a small uptick in the December quarter in farm GDP. This was a reflection of 2 factors. One is the destocking that continues to take place on Australian farms. But there was also an increase in demand for Australian stock as the African swine fever took hold. Next slide relates to the housing savings ratio. The household savings ratio has come down slightly to 3.6%. As you remember, in the last quarter it went up off the back of people getting the tax cuts, putting money effectively into the bank, or effectively saving that money. Now, with the tax cuts and people have received their low income tax offset, now that number has started to come down. Compensation of employees, this is a positive story. This is the wages bill for the Australian economy. Above the 10-year average and 5.1% up. This reflects the strong employment growth that we've seen across the economy and the continued increase in wages. Next slide. Again, international employment growth comparisons at 1.9%. Australia's employment growth is well above comparable countries. So our unemployment today is at 5.3%, but our employment growth at 1.9% is extremely strong compared to other comparable countries. The next slide is a reflection of the December quarter real GDP growth numbers. Australia and the US at 0.5%. But again, Australia in the quarter that we are talking about today has performed well compared to other countries. The last slide. International real GDP growth comparisons through the year. Australia at 2.2% is just below the United States, but as you've heard, the IMF as of January still has Australia this year and next growing faster than those other comparable economies. I'll take some questions, yes.
What's the risk of a negative outcome for this quarter, given the bushfires, the coronavirus?
Yes.
And even if you're putting together a package, that's not going to come into effect for this quarter now. So what's the risk, do you think?
Well, I think the risk to the economy from the spread of the coronavirus is substantial. And we have seen Treasury estimate about a 0.2 percentage point impact from the bushfires, which will fall predominantly in that March quarter. Treasury is finalising now, in light of what had happened last night with the US Fed Reserve, reducing interest rates, and tonight Treasury and myself on a phone call with the International Monetary Fund for an update on the spread of the coronavirus and its economic impact. So once that call is completed tonight, Treasury will finalise tomorrow morning their estimate of the impact on the March quarter, and the Treasury Secretary, Stephen Kennedy, will talk to that number at Senate estimates tomorrow morning.
So a report by Deutsche Bank has predicted that Australia will fall into a recession for the first time since 1991. Are we heading for a recession?
Well, I think what these numbers show is how resilient the Australian economy is. I mean, we've had bushfires, we've had floods, we've been dealing with the ongoing drought, as well as the trade tensions between China and the United States. These are events that are outside of Australia's control. Yet despite that, Australia continues to grow. And we have seen, importantly today, consumption up, net exports up, public final demand continues to contribute strongly to the Australian economy. When it comes to the impact on the March and subsequent quarters, obviously we would like to mitigate the negative economic impact of the coronavirus. And that is why the Prime Minister has foreshadowed that we will be announcing a series of measures which are designed to keep businesses in business and Australians in jobs. What we will not be doing is we will not be jeopardising the hard work that we have undertaken over the last 6 years to bring the budget into the good health that it is in today, where Australia is living within its means. What we will also not do is repeat the mistakes of the past, where there were cash splashes that saw wasteful spending on everything from pink bats and overpriced school halls to cheques to dead people. We will not be doing that. We will be having a targeted, a responsible, a scalable approach to what is a very serious economic impact as a result of the spread of the coronavirus.
The PM hinted yesterday at an investment allowance as part of this announcement. These numbers today show investments down. One of the things that did fall in the quarter, can we sort of take it as a given that will be part of the package? And will it have a domestic focus? Will the money have to be spent domestically?
Well, Phil, nothing's a given in this game, as you know, and the details of that package are still being worked through. I do point out that today the Deputy Prime Minister has already made a statement that he is contacting state premiers and chief ministers and asking them to put forward, as we did last year, investment proposals that could be undertaken in the next 3 to 6 months, effectively, as quickly as possible. In fact, immediately, if that is possible. So we'll be waiting for that feedback. But as for an investment allowance, this is obviously under very serious consideration. This is something that the business community has asked for, and if you look abroad, some other countries have put in place fiscal responses which include support for business and investment, because this is a really important point, Phil. We want, obviously, Australian businesses to get the support through this economic shock. But when we are over this economic shock, we want the Australian economy to be stronger. We want to have greater productivity, and investment is a key part of that. So obviously that will be a focus for us.
Sorry, Treasurer, you have a division.
Oh, goodness, great.